And welcome back to America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker and Scott Kirshner. 419-794-3030 is the phone number if you have questions about things we talk about today or questions as it pertains to your retirement we may not have talked about but you want to know more about. Really easy to get in touch with 419-794-3030 or americasretirementheadquarters.com. NFL wide receiver Tyreek Hill had a choice between joining the New York Jets or the Miami Dolphins, and he almost chose New York.
You know what? It was very close to happening, man. But it's just those state taxes, man. I realized, I had to make a grown-up decision. And, here I am in the great city of Miami. Great weather, great people. So here I am.
Hill selected the Dolphins because playing in Florida would save him about $2.7 million in state and local taxes. Not too bad. Now we know why a lot of retirees actually move to Florida. How can you lower a retiree's tax burden if your client doesn't want to, pick up and move somewhere?
Well, I guess it depends on where you look at in Florida right now with, of course, that terrible hurricane that went through. I talked to a handful of people that maybe were impacted by that and had some flooding, and other people that got lucky.
Right.
That's how things happen. But in general, I love Florida.
Yeah.
I go down there as much as I possibly can and, love going down and putting my feet in the sand. And, not only is it, good in this time of year to go somewhere that's warm and comfortable, it's nice to be able to be in a place that you can save on taxes. And, I think oftentimes people ask that question, why would my taxes be higher in retirement time, is a common question. If you think about the conventional wisdom, people were taught to save and invest in tax-deferred retirement accounts, the 401ks, the IRAs, the 403bs, and they were taught that when they retired, their tax rate would be lower. And what many retirees oftentimes find out is that's not really the case. Ultimately, there's two systems of taxation. It's one for the informed and one for the uninformed. Deferring taxes on a retirement account can be a tax time bomb, and it's something that really you kind of want to address head on. Think about going home and you have a leak in your sink, and you just, close the doors and say, I'll look at that later.
Right.
We know that problem's not going to get any better. We know with, what has gone on with our national debt and the continued spending that we have, that tax rates very well could be higher. For those people that are maybe 5 years before retirement, or even those of you that are in retirement, proactive tax planning can make a big difference. I know right now we're meeting with a lot of people and we're looking for ways by going through the tax saver checklist on how to save money on different things. For example, oftentimes, Scott, people pay taxes on money that they don't need. Just letting that money build up and paying taxes on it, it really could be a costly mistake. What you really want to consider doing is looking at ways to move that money over into what I would consider to be tax-free accounts. There's, whether it's municipal bonds, it could be tax-free life insurance, it could be Roth IRAs, other vehicles that are out there. Something else, we're going to talk here in a little bit about what's called our Committed to the 419 segment. And during that segment, we're going to talk a little bit about, the impact of people and organizations that are doing good things in the community with Kathy Mull, the executive director of Cocoon. But as we've had so many different times on the show, there's so many great organizations here that people want to make a difference for,
Sure.
and they want to do things. For those of you who are over the age 72 and you have a retirement account, if you don't know yet, what you need to know is that with your required minimum distribution, you may have the ability to donate that money directly to a charity. And considering using your IRA to make those donations does two good things. Number one is it keeps it off that taxpayer's
Sure.
taxes, keeping their tax rate lower. And number two is it gets 100% of the money to the charitable organization versus having it come to the account owner. They pay taxes on it. Then you're at 70 cents on the dollar. You can do better and make more of a difference, helping, save your money in taxes in retirement time. Another area that is a big one is people not understanding and not knowing about the potential benefits of things like contributing to a Roth IRA.
Exactly.
And or doing a Roth conversion and maybe looking at paying some taxes. I had met with a couple earlier this week. We did some preliminary analysis. Now, I must say that I'm not a CPA. You always want to seek the advice of a qualified tax professional before you make any tax decisions. But what I looked at is they had about $35,000 that they could convert over to a Roth IRA and be able to stay in the 12% tax bracket. Now, just again, like what I just said, they're going to go back and sit down with their CPA and take a look at that. But before the end of the year, what they can do is they can take some of their stocks that are down in value, convert it over at these lower tax rates, and take advantage of some of the potentially tax-free growth in the Roth IRA. One that catches people off guard is the Social Security tax. A lot of people are not aware that when you get into retirement time, our country has two systems of taxation. One for us that are working every day, but the second is for retirees. So not only is probably the greatest generation alive out there in retirement time, they get to pay the same type of taxes that we pay ordinary income, but then they also have a secondary tax that they pay on Social Security. And people are like, well, how does that work? I paid Social Security my whole life. You mean they're going to turn around and tax me on it? Yes, if you have a certain level of income, they're going to consider you to be wealthy. And not only can you pay provisional ordinary income tax, you can also end up paying Social Security tax. But smart strategies that are available can help reduce the amount of taxes and help, a retiree pay less in taxes. Scott, I know in your situation, one of the other things that can be one of these snowballs or double whammy effects is the fact that your taxable income can end up creating higher costs for you for healthcare.
Absolutely. It's actually going to affect those that are under 65 on whether you're on the Affordable Care Act or over 65 on Medicare. On Medicare, your Part B premium could be significantly higher if you have, a large income based on 2 years look back, right? I mean, your premium, the standard premium for 2023 for Medicare Part B is $164.90, right? But if you're earning $250 to maybe $400,000, you could be paying almost $450 a month for Part B based on a 2-year look back. So one way to combat that, and it's kind of the same with the under 65, is if you take income, immediate income, getting close to retirement out of a Roth IRA, it does not count as reportable income for your health insurance premium. You could have a lower income, which would increase your premium tax credit, in turn reducing your premium. I know that's kind of an up and a down and an up and a down, but the important thing is to make sure that you understand what's reportable income and what's not, whether it's on the marketplace plan or over 65 on Medicare. One of the tools that a lot of people use is a health savings account. I'm not talking about a flexible spending. There are flexible spending accounts out there, and I'm not talking about an HRA, which is a health reimbursement account. I'm talking about a health savings account. You can put money into a health savings account and get 100% tax write-off on that money that you put in there. So that's a way of maximizing some tax write-offs to lower your income, your taxable income. That money can be used to pay for medical expenses when you are on Medicare. That's your money. So one big question I have is, well, what if I sign up for Medicare and I am contributing to an HSA? If you sign up for Medicare, then you can no longer contribute to an HSA. So a scenario would be very simply this. Let's say that you're working past 65, you have an employer-sponsored health plan, but you're thinking about signing up for Medicare. If you're contributing to an HSA, don't sign up for Medicare because you will no longer be able to contribute into that HSA. So there are some rules and regulations to doing so, and I can help you out with those. But, a lot of people, I've got some clients that got $40,000, $50,000, $60,000 sitting in an HSA account, which was 100% taxed write-off when they put that money in there, and they can pull that money out for medical expenses tax-free. So, like you said, Nolan, understanding the tax ramifications and how to manipulate that is always a good thing, and we here can help you navigate through that.
There's a pretty significant difference between tax mitigation and tax avoidance. Tax avoidance, for the record, is illegal. Don't do that. But minimizing the amount that you have to pay, that you legally have to pay, not just going with the rules as written, knowing them and then knowing how to work them in your favor. Because obviously, he who makes the rules, well, who do you think it's benefiting the most? If you just go with the status quo, that is fine. But there is a better way, and I think it kind of goes without saying. The less you're paying out to the government, the more money you get to keep towards your retirement. The 2-year look back on Medicare premiums is yet another example of why starting the retirement planning process a couple years before you're actually going to retire, not 6 months beforehand, can really benefit you in being able to use all these rules to your favor. So again, if you're in your 50s, if you're in your early 60s, even if you are going to be retiring in 2023, you have that circled, all the more reason, honestly, to start developing that retirement plan. And to do so, give a call. 419-794-3030 is the phone number, or if you prefer, you can go online to Americasretirementheadquarters.com. This is America's Retirement Headquarters, home of the Retirement Guys formula and America's Medicare Associates. Thanks so much for joining us today. There's more to come after this.